Mic check, mic check, mic check. Yo, yo.
Yes, sir.
What's going on, my boy? What's going on?
What up, man?
Another day. I'm excited for today, man, because this is actually one of my favorite chapters. I think in this book, I think it's like top 2 for sure, and it's not 2 because this spoke a lot of volumes to me as a trader. But I'm gonna go ahead.
This chapter is really good. You know, I took a lot of good notes on it, and I think a lot of people need to hear. I mean, they need to hear everything on this one, but this one's a really good chapter. Give me just 2 seconds, so I need to text back this person really quick, and then
Absolutely.
we'll get going in this.
We'll go ahead and get started shortly, guys. But before I get started, number 1, let me turn down the volume real quick for myself. And number 2, guys, don't forget to drop a like, drop a subscribe, and save this video for later. We're gonna start, now that this is chapter 2, we're gonna create a playlist for trading in the zone. But guys, these sessions that we're doing it for y'all so that y'all can keep it in your back pocket. So you can go back and listen to it. Not even from Mark Douglas's point of view, but from a more, not modern point of view, but from our point of view as well, you know, because this book was made not definitely in the 2000s versus you can get a fresh perspective from our point of view. So again, guys, drop that like, subscribe, and let's go ahead and get into this thing.
Let's do it. So this chapter number 2, is the lures and dangers of trading. And lures, if y'all don't know what that is, just bringing you in, kind of the attractiveness, and then the dangers, of course, the dangers of trading. What could be kind of dangerous to some of y'all's trading accounts and whatnot, and why y'all are kind of messing up maybe. So let's get into it. The first chapter, or the first part of it, I guess, is talking about the attractiveness. And go ahead for the next slide, AB.
Okay.
The attraction, and this is what he starts off, and he starts off talking with an editor, and Mark Douglas is asking the editor, like, you know, he's another editor of like Wall Street stuff, and Mark Douglas has been doing this for a while, and he's asking the editor, why do you think so many people like fail in this? And the editor was like, well, maybe it's because, you know, they're doing it for the wrong reasons. They're attracted to this thing for the wrong reasons. And so here I wrote, trading is an activity that offers the individual unlimited freedom of creative expression. And so that's one of the reasons why people naturally gravitate to trading. They in their life, they don't have that much freedom, but when you get into the market, it is basically you have unlimited creativity in the market. And that's why I love it personally, because you really get to get that creativity out onto the market, and like you'll see later on, and continuously be able to see that a trade, it has a probable outcome. It's going to either win or lose, and so that is a fact. So it doesn't necessarily matter. What matters is that you're able to use your psychology correctly in these markets and have somewhat of an edge. But the reasons why people are so attracted to it is because of that unlimited way to be able to think.
Yep.
The second thing I wrote here is there's unlimited possibilities coupled with the unlimited freedom to take advantage of those possibilities present the individual with the unique specialized psychological challenges. And so that's what I was talking about just before that. It's these in life, you don't usually just have the unlimited freedom
to do whatever you want. There's nothing.
Whatever you want, exactly.
There is absolutely nothing in this life that gives you the freedom to do whatever you please at whatever time you please, however you want to do it, whatever scale you want to do it at. There's nothing in the world that is like that. And
very much no structure to this market at all, besides the market structure of the patterns and stuff. But when it comes to, you know, you in the market, you have to create this structure. The market is going to rip you up if you don't have any type of structure. And that's what it's saying right here. It presents a unique and specialized psychological challenges, because everyone is different, so everyone has to deal with the market a little bit differently, and that's why it's unique, specialized psychological challenges. It's so the last thing I say here: people naturally crave freedom. That doesn't mean they have the correct mindset to be a trader. So like we said, the trading gives you that ultimate freedom, and that's the attraction. People love that. And
you know, there's one thing that he said in the book that really stuck to me about this, about people naturally craving that that freedom, is because like every single one of us, when we're a baby, we crave that curiosity to know and to learn something, right? And with that curiosity, we're not all attracted to the same things, but the one thing that we all have in common, that we are more or less attracted to, is money.
That's true,
right?
Especially in today's world.
Especially when you have social media, you see people with their Lambos, you see people making thousands of dollars. You see what, especially, you know what's one thing that always triggers me, and it triggers me because it's just like it's just a misconception, and it plays such a psychological role on people, is when you see 19-year-old millionaire.
Right.
It's like, because then it's like it's gonna put that thing on some people's minds. It's like, dang, I'm over here 32 and there's a 19-year-old millionaire right here. I'm failing in life. Or there's some 16-year-old that sees that is like, dang, and I'm about to be 19 and there's already millionaires out there. And it's just crazy, because the way how it's like, I don't know, you know what I mean? You know, that's why I'm like, that's why I say it triggers me, because it's just like, dang, it's just crazy play on words, kind of.
I mean, yeah, I agree. And like you said, like people, they crave the freedom, but like you said, for the baby, the curiosity, and everyone's is different, but everyone they do crave money. That's facts.
Or they crave the lifestyle that money can create.
One of the two.
Especially when you're growing up, you're seeing these advertisements on the TV and stuff like that. You know, bro, it's just crazy, because now when I look at commercials and stuff like that, I see a lot more differently than how I looked at it 5 years ago, because it's just like, dang, these are all psychological ploys to get you to buy this product.
Yep. It's crazy, man.
You know, even down to the colors that they use. It's crazy.
It really is. All right, let's go to the next slide.
All right.
He talks about the other side, which is the dangers. And he talks about your needs and desires a lot in this part. And how your needs and your desires are generated in our mental environment, and they're fulfilled in our external environment. So what you want and what you kind of need and desire, that is all created differently. Each person is different. And so each person is going to have different needs and desires, and those needs and desires are fulfilled in the external environment. And when you don't fill, and what he goes into to saying is, when you don't fill those needs and desires, it creates a mental vacuum. Okay, or more or less, the need and desire is a vacuum. Okay, and like the law that they speak about, the nature abhors a vacuum or whatever it is.
The law of natural. Dang, hold on, I got it right here. It's. Oh man, how am I not seeing this? The force of natural attractions. Is that what you're referring to?
It's something, but he talks about how when a need or desire is not met, it creates this imbalance, and because your needs and desires inside of you, they basically crave to be met, and that is the vacuum. It is like a hole. When you have a need or desire inside of you, it is basically an empty hole, like a vacuum that needs to be sucked out or filled, is what it is. Was they're trying to reference there.
And you know what this reference reminded me of? How somebody, I don't know where I read it at, but you know the 5 love languages? Somebody said that your love language is what you didn't get when you were a child.
And they said that in here, how what you like didn't get growing up
is what you're going to be addicted to in some sort of fashion. Yep.
Yeah, they talk about it a little bit later in the chapter, more about addiction and stuff, which is very interesting. But
I can't wait till we get to that part, because
whenever the end of the chapter really hits, the beginning of the chapter is kind of like it jumps around a little bit, and then towards the end it like brings it all together, and you're like, there we go. But whenever you have this need or desire and it doesn't get filled, that creates this imbalance and an emotional pain, and that's what he calls these denied impulses. And he talks about in later on in the chapter, and he brings it all together a little bit more. But when your denied impulses are not reconciled, that's when you start to get dumb emotional.
And that's from when you're a child. Like those those denied impulses from even when you're a baby, because we've heard no thousands of times, which puts us in an imbalanced state. So that it comes back to you even when you're an adult, which is why they call you like, oh, you got daddy issues or mommy issues or whatever like that, you know?
Facts. And all that stuff from when you were a kid is what has created this mental environment that you are that create your needs and desires, basically. Well, your needs and desires created your mental environment, but what you had heard from a kid and your social upbringing and everything plays a part in that, in what your needs and desires are going to be. And then when those don't get met, the imbalance happens, and that goes to say, like, in trading, I would compare that to say that you need to make money.
Yep.
And you start to lose and lose, you're probably going to blow your account soon.
Yep.
Unless you have your mental
on check. Point. Yeah, exactly. Yeah, I can even speak to that, because me personally, I feel like when I was reading this, even when I reread it and I had to reread it again, realistically speaking, I was like, dang, I think that what mine was, what that I was missing from a child, and I even can point that out even to as old as when I got to 18, that I'm reflecting, is the lack of money, you know, or the lack of being able to buy stuff that I want to buy. I think that that's something that might have been one of my dangers in trading. So once I learned about trading, I was like, oh, this is about to get me a bag to like different levels, you know what I mean?
Right.
And it's just, I don't know, it was interesting when I read up on this and I really reflected on it.
No, I feel that. Okay, go to the next slide.
Safeguards.
So yeah, now it goes into having that like basically that checklist, or more like an internal checklist in your structure. So it says you need to create an internal structure in the form of a specialized mental discipline and a perspective that guides our behavior so that we always act in our best interests. So everyone is going to be different when it comes to this. Every single person, because everyone's just life has gone differently, right? Maybe if you have a twin brother or something, y'all might have the same type of like way of like creating this internal structure, because that's what it says. You literally need to create an internal structure with specialized mental discipline. So what does that mean? That means when you lose 3 trades in a row and you know you are a very much of a person who is reactive, and maybe you have a little bit of an anger problem, or maybe you just don't like to lose, you know who you are. What this is saying is that after 3 losers in a row, you need to create something, mental discipline, so you can step back. Because in your best interest, you need to chill out after 3 trades. Because dog, you're about to put yourself in a hole. If you're that type of person, right? You got to know who you really are, and then create these internal. If you have taken 3 losses in a row and you have done every single thing right, and you know you're not the type of person who that will get to you, well then maybe that's not part of your mental disciplines. Maybe that's not part of your rules. But maybe if your behavior pattern is after 3 trades, you start 3 losers, instead of you going and thinking you're about to go blow your account on the next trade, you're about to get into another trade, you're revenge or blah, blah, blah. Maybe you just think, man, my strategy doesn't work. No, you need to hold up, go back, start back testing. These are these mental disciplines that you have to create to be a consistent trader, guys. I'm telling you, you're not going to be consistent. You will have, and it talks about this, you will have days where if you're not a consistent trader, you do not have to have these things in play to make money in the market. You have to have these things in place to consistently make money in the market.
Huge difference.
If you've ever played golf, you have hit great shots before, right? You on 18 holes, one of those shots are great, probably, like amazing even, we could say. Good for you, pat yourself on the back, but you still shot a 108. So like you are still 20 over par at the end of the round. You are not a consistent golfer, right? You had a great shot, right? All the people who go to LA Fitness or whatever playing basketball, yeah, cool, dude. You hit a great 3-pointer, but dog, you missed like 10 other shots. You're not a consistent shooter. But it goes into this next part talking about how random rewards and randomness gets people caught up.
Yep.
And so the second, go back real quick. The second bullet point says only consistent winners define their risk before putting on a trade. So that's one of the biggest parts in your safeguard. You definitely, not only do you want like mental things that are going to tell you like, hey, I need to chill out, I'm gonna go meditate, or 3 losers in a row, okay, I'm gonna just chill out and go back test, whatever. You definitely want to have risk defined before you get into a trade. Every single consistently profitable trader does this. And the reason they do this is not because it's not because they're afraid to lose money. This is what a lot of people who don't use a stop loss will say. They will say, well, if I'm right, I'm right, and if I'm wrong, I'm wrong. Or what? They'll say so many stupid things like, they'll say, well, if your strategy is correct, then why do you need a stop loss? Or like, if you think the market's going up, or this strategy has a 90% win rate, I don't need a stop loss. They'll say the craziest things. And what that is, it just boils down to they genuinely haven't accepted. Remember last chapter we talked about acceptance. They have not accepted the risk, and they haven't accepted that each trade has a probable outcome, which means it could be a loser. They have not accepted.
And there's always that possibility that your trade can be a loser. There is nothing in this world that is going to guarantee your trade to win. Nothing in this world.
Nothing. And anything can happen. There is, like we said, there's no rules in this market, guys. There is no rule at all. And he talks about how it's so important to define your risk before you get into a trade, because of that specific thing, how there is literally no rules. And he even talks about how gambling
has more rules than trading. Yes. That's the part that always blows my mind.
He talked about how in gambling there is a start, a middle, and a finish. Mm-hmm. In trading, there is no start, middle, finish unless you create safeguards. You have to create these structures. And so like when you gamble, he says, when if you're playing blackjack, you have to predetermine how much money you're willing to lose before you bet. So that's predetermining your risk right there. So automatically when you're playing blackjack, you have a stop loss technically. And so and then here's the thing, you have a middle where it does what it does. And then at the end, you decide if you want to continue gambling or not.
Yep.
And that's 100% on you. In the markets, if you don't have a stop loss or a take profit or a system, you're just going to keep going and just keep going. And it's just, the market's it's just going to take all your money from you, most likely, or you're going to make a whole bunch of money and not know what to do with it, and you're going to lose it all. And so this last thing here, it says, you have to be an active loser in gambling, but trading has no formal ending unless you have a stop loss, which means you can become a passive loser if you don't use a stop loss, meaning you can lose without even trying. And that is a huge one of the dangers really of trading. It's it's a double-sided sword where there's so much creativity and so much range of freedom, but then at that same time, that is the sword that kills most traders. The
gift and the curse.
The gift and the curse. And if you do not create these safeguards, these mental structures, these rules, there is no saving you.
It's just that simple. It's the sad reality. There is not.
Yes.
You have to create rules for yourself in trading. And having a stop loss is one of the most important rules that you have to create for yourself. Because if not, the market is going to keep going the opposite way, and you're going to lose. You not using a stop loss already shows you don't have a predetermined risk. And again, just like with gambling, there's already predetermined risk. It's because they always tell you this is the minimum that you have to play, but this is the max that you can play. You can't go above this high. You can't go above this when you're playing blackjack. So it's just it's important.
It's important, and if you don't put it into your strategy, you're just gonna blow your account. Straight up. All right, so then it goes into a couple of the problems, the unwillingness to create rules. So then, this is the real paradoxical part about it, right? So like, you know, you need to create these rules for trading, like once you start to get into it, but then like you got into trading because it was so free and there was so much freedom, right? And the creativity was everywhere, and like you were like, oh, no rules, really? Like, oh, this is my type of market. But the paradox is that you have to have so many rules. It's the quite opposite.
It's quite opposite of what it seems to be.
Yes, it is a way of expressing your creativity, but it is not the same as everything else in the world.
It's not
right?
like art where you can draw whatever, and if it's catchy, someone's gonna buy it or make money off, or you're gonna make money off of your art. Or someone can be like, oh, that looks really nice and stuff like that. That is not this type of creativity.
Yep. And so in this part of the chapter, he talks about a lot about the let's see, the first thing it says is most of the structure in our mind was given to us as a result of our social upbringing and based on the choices from other people. These structures were installed in our minds but did not originate in our minds. So
from society, the people that we grew around with, right?
Yeah, like who you grew up around,
the stuff that you watched, society,
all that stuff. And so that's what most of what is in your mind is from that. And so the third thing it says, when structures were instilled, there was a lot of denied impulses that built up. So there was a lot of things when you were a kid or when you were growing up, maybe that he talks about, like maybe the athletic family that you were born into, and maybe you were athletic, but you just don't like sports. You just don't like sports. And that causes somewhat of a denied impulse because your whole family's like, no, you're gonna play sports or we're gonna like disown you. And so those little things like that growing up create these like denied impulses in your brain. And then when you go into trading, these are the rules and these are the things that you kind of don't know how to change or don't want to change. And so the last thing here says, the reason we are attracted to trading, the unlimited freedom of creative expression, is the same reason we feel a natural resistance to creating the kinds of rules and boundaries that can approximately guide our behavior. Just like I said, the first thing.
Yep.
The creative expression is the same reason that kind of is our downfall.
It's just crazy. Like, I want to give the example of, like, look at Michael Jordan and his son. You know, his son is he's no bum on the courts. Let's not get it twisted. He's no bum on the courts, but that's not what he really wanted to do. And so as he was growing up and he was growing up and playing basketball and stuff, he started to gain like that built up denied impulses. Mm-hmm. It ended up taking over his life as he became an adult, because it's like, no, I don't want to play basketball. This isn't what I want to do. I'm not as good as you. You know, I want to do something else in my life. And it's just like, you know, it's fortunate, like people like LeBron who have a son and sons who actually do want to play basketball. You know. It's like, and that's for all we know. But what happens if that's not what they really want to do? You know, they're not, that creativity that they have built up for something else is like, oh, well, I guess I got to use it for something I don't even like. You know?
Right. Yep.
All right, on to the next one?
Yep.
All right.
Okay, next problem is failure to take responsibility.
Ooh.
So nothing happens until we decide to start, It lasts as long as we want, and it doesn't end until we decide to stop. So that's how trading is, straight up.
Literally.
You decide when you get into the trade, so that's on you. You decide how long you want to be in the trade, that's on you. And then you decide when you get out of the trade. So it's all 100% on you, no matter what.
And you know what's crazy?
No matter what.
You know what's crazy? You know what else is all the same thing as all this? Your emotions.
What? Yep, very exactly. Yeah, your emotions are all on you as well. No matter what the external world happens to you, like you get to decide your emotions.
You're the one that decides when it starts, when you can be in the middle of it, and when it ends.
Yep, that's true. The second thing is, no matter what the outcome, you are completely responsible. Third thing, random trading and random approaches allow the trader to feel good when the trade goes their way and not feel bad if the trade goes against them. So this is why a lot of people don't take their own trades. He talks about this in this chapter, why you will and it's usually, a lot of this stuff is beginner traders, and then like for people who've been trading a little bit down the road, you'll catch like a hint of some things and you'll be like, oh yeah. But especially for beginner traders, they'll mark up their charts and it'll look really good, and then their mentor will send out a trade, or like a trading signal service will send out a trade, and they will take that trade over their own trade that they marked up. And the reason they do it is 100% because they just don't want to take the responsibility if it's a loss. Taker. Yes, so they would rather feel like okay with this random approach for like, if I win, then hell yeah. If I lose, then it wasn't really on me, and that
I could blame somebody else. Oh, it's this person's fault because they're the reason why I lost the trade. They're the reason why I lost my money. It's not my fault. And right. It's crazy because people do love blaming other people for their misfortunes.
Right, and not just trading, that's for sure.
That's not just the trading thing, that's just a life thing, which is so much crazy. Again, through this book, you guys will see how this all pertains to real life situations as well, right. Not just trading.
Yep. And when you start to think about it, how the people who, will take a signal and then they will say like, trading isn't for me. It's like, you didn't even give it a shot, first of all. Mm-hmm. And then you really expect it. If it was that easy, anyone could just take these person's signals. You know what I'm saying? It's just like, I don't know, people who don't take responsibility for their own trades, if you're still on that level, then that's just a complete hurdle you're still waiting to get over. You gotta really because I'm 5 years into this now. I've taken full-blown responsibility at this point. It's been a while for me now
to blame somebody else, right?
I do remember whenever I was with swipe trades or whatever, and they would send out a signal, I'd be like, what the heck, blah blah blah. It's like, nah dude, like, you accepted that signal and
you're the one that placed the trade.
Yeah, so like, it don't matter who sent it, you're the one who placed it. And so and you bring this up about those who just start trading, and that's a great point right there, bro, because a lot of people are down to say that, oh, I'll try this, and then it's only when they're successful at it is when they continue to go at it. But when they first start to get that resistance or that failure inside of it, that's when they're quick to say, this isn't for me. And it's just, that's how you know that trading really isn't for everybody. It's not, that's for sure. And most people cannot take responsibility for things. So it's like, a lot of these things that you have to do to be a trader is very hard for people to do in the real world, or it's like a paradoxical thing that
straight up paradox.
You would think it would be like this, but it's not. And then like everything that is pretty black and white is kind of hard to do. And so it's very not easy.
It is not.
Let's go to the next problem.
All right.
Which is the addiction to random rewards. And now this is when they did a study with the monkeys, and they said they taught a monkey a task and they would reward it consistently, and the monkey would associate that task with that reward, right? Every time it did a task, whatever they taught it, it would get a reward. And then they stopped giving that monkey the reward after it would do the task. So say they taught it to like take the trash out or some shit, and then they would give it a cookie every time that it took the trash out. And so it started to realize that, hey, I'm about to get a cookie every time I take the trash out. And then they were like, all right, stop the cookie. And he would take the trash out and he wouldn't get no cookie. He'd be like, what the F? And let's go to, I'm gonna take the trash out again. Didn't get a cookie. It's like, what? All right, let's try this again. Took the trash out, didn't get a cookie. That monkey stopped taking the trash out.
He's like, I ain't with it.
So then they did a test where they rewarded the monkey just randomly. So he would take the trash out, he'd come back, nothing. Take the trash out, come back, here's a cookie. Take the trash out, come back, here's a cookie. Take the trash out, come back, nothing. Take the trash out, come back, nothing. Right? Random as hell. He didn't know when he was going to get a cookie or when he wasn't going to get a cookie. But he did know he was going to get a cookie eventually. So he just kept taking the trash out. He kept doing it. He just was in this cycle. And it says right here, when we expect a particular outcome and it doesn't come about, we're disappointed and feel bad. If we do it again and get the same disappointing outcome, it isn't likely we will continue to do the same things that give us emotional pain.
Yep.
So it's kind of like in trading. If you are doing something over and over and over again and you kind of lose again, it's likely that you're gonna like
not be attracted to it.
Yeah. And then on the other side of things, if you're trading with a randomness, just a random approach,
then you're just gonna keep trading.
You're gonna probably keep, and then like it says, you can win one big trade. You don't have to be a good, consistent, profitable, all the time trader to have a good trade. That anyone can do that. Anyone can hit a golf ball in golf, right? Like I said, but to be consistently profitable, that's not it. And when you do those random trades, because everyone knows what I'm talking about. You have a perfect strategy, cool. You've back tested your strategy, cool. Okay, well, now the market is doing something that you do not normally ever trade, but you put a freaking 1 to 20 risk to reward on it because you just
because you can. Because
you can. It's a free market. You can do whatever you want, and it hit. Oh, cool. Now
then you can go try and do it again.
Now you just got this random reward from the market, completely random, because that's not the way you really trade. And now you are kind of just, your mind just went like this, and you don't know what's going on now because you were just handed 1 to 20 risk to reward, whatever account you got. That's amazing. And it was totally random. So now what are you going to do? You're going to go take the trash out again and hope for a cookie.
And you know what's crazy, bro? You know what this reminds me of? This reminds me of, I don't know, the first thing that comes to my mind is parenting when it comes to this. Because if you have, like, let's say, for example, you give your kid chores. And you say, if you do these chores, I'll give you some money depending on the amount of chores that you do. Of course, the kid is gonna do as many chores as they possibly can so they can get as much money as they possibly can, right? But the moment that you stop giving them that allowance, do you think they're gonna keep doing that same thing?
No.
Nope. But then if you do it randomly, they're gonna keep doing the chores randomly.
They're gonna keep that room clean.
They're gonna keep that room clean. They're gonna make sure that them dishes is washed because they know that if they keep doing it,
something's coming.
Something's coming. This is exactly what this reminds me about. Oh my goodness, man.
That's good. That's good stuff. That's funny.
This is funny, right?
I think there's like one or two more slides.
Yep. Let's get to it.
Okay, internal versus external control. So these are all problems, right, that we've gone over. The markets are not a social endeavor. It's truly every man or woman for themselves. And he called it a psychological wilderness.
Psychological wilderness.
Which I liked. I thought that was really cool. But and this is basically like saying like it's all up here when you're trading more than, you know, the technicals. And he talks about how this is really important for a lot of people who maybe are successful in a lot of things that they do, and then when they come into trading, they're finding that they aren't as successful. This right here is why. It says if you're good at being able to manipulate or create the life you want outside of trading, so if you have the house of your dreams, or you have the wife of your dreams, or you have whatever, you know, you have a good lifestyle, what you did there was you created that. You, for lack of better words, I don't like the word manipulate there that he used, but you generated that lifestyle.
Exactly.
Right?
That's such a much better word to use, generated, than manipulate. That's one thing that I agree with you for sure with.
So like when, you know, you got that job as a doctor, you went to college, you worked your butt off, and then you got the degree, then you got the job, and then you worked your way up and you made everyone in your office like you, and then you got a promotion. Like all these things, that's because of what you did, and you created that. And so you are successful as a doctor because of what you did. When you come into the markets with the attitude like that you can control the market, like you controlled how you were able to study, because here's the reality. If you're going to college and you go to class every day, you can control that. You can control how much you study. If you study, I don't know, probably 1 to 2 hours of that class every single day.
Which is, it's funny that you say that, because that's what they literally recommend for you to do for per class in school.
Right. And if you actually do that, which is something you can control, yeah, it's hard.
That's funny how you hit that. That's hard.
You will like naturally come into this
and get an A
of getting an A, right? The thing about the markets is you can wake up in the morning at 6 a.m. You can set your chart up perfectly. You can find the best trade, and guess what? You can still lose.
Yep.
And
the markets don't care about you.
The markets do not give a rat's ass about you. And the thing that people like doctors, lawyers, professional athletes,
those who know about having consistency,
anyone who's successful in the outside of world of period anything, when they come into trading, they think that it's going to be like that because everything else in the world is like that. But trading is not like that. Trading is the opposite. You have there's genuinely nothing you can really do. You can find an edge, and then you have to play that edge out over multitudes of trades for it to work. So, and that's it. And that's all you can do to even to make money in this market.
And I
You
bet
find
some
an edge
people
in
who
it.
are, I bet some people who might be new to trading who are watching this, they're like, why are you still trading then? I bet a
Why
lot of
would like a doctor still be trading or
no, like
something?
just like in general, like yeah, like exactly, like a doctor or like an architect or anybody who like you said who has had success, they might be like, why will I continue trading if I know this is gonna be difficult? And that's when it's like, well, you got to dig deep and see if this is something that you really want to do.
Yeah, definitely.
Because
Like,
this does
I
have
mean,
unlimited possibilities, but you have to have structure in this land of unlimited possibilities in order for you to see some type of success. And even that
exactly.
is not guaranteed.
Exactly. It's not the same structures, it's not the same thought process, it's not the same anything as the other worlds that we live in to generate money. And so when I would say for those people who are like, well, why would I even try or should I even try? I would say that that's 100% up to you, and you don't know until you try, because that, I mean,
That's just life. You don't know until you try.
could
You didn't
fall in
know. You didn't
love
know what life of
with
being a
this.
doctor was until you tried it, right?
Exactly. You don't know what anything is like until you try it. But I will say that naturally it is going to, and you don't know that until you know that. Now if you know that now, it won't you will have a combative thing. Most people don't read this book before they start trading. They read this book after they've lost $50,000.
Fact.
So if you get into this and read this book before, or even, as you're a beginner, you can get that click on, oh damn, like I am that type of person where I'm like maybe not like a materialistic person, but like I get what I want to get, or like an interior designer maybe type person, or someone who's very like just the aesthetic type, pleasing type person. That's going to be the same thing for y'all. Like, this market does not care how pretty it looks or how clean it is. It's gonna do whatever whenever, and just being able to accept that is tough for some people.
It is.
Very tough. Let's see. Control your perception of the market information for you. Learn to control. So yeah. And this is like what you can do, what you have to do. You have to control your perception and interpretation of market information and your behavior. And you have to learn to control yourself so you can perceive information from the most objective perspective possible, and structure our mental environment so that we always behave in a manner that is our own best interest. That's so important right there. That last one is so important. Being able to control yourself, because that's what the market does. It gets you out of control. That's what we just talked about previously. It will get you out of balance.
You're gonna like this one that I got
your
for you.
denied impulses, and it will freaking it will make you feel emotional. But if you have these checklists, if you have these mental safeguards, if you have these parameters in place, that you can kind of control yourself in these moments, and then you will be able to still work on an objective level, which is what you really want to be like at all times in trading.
Yep.
And if you can't get under control, you are literally gonna just do dumb things.
You ready for this one?
Yeah.
You ready for what I just thought of with this?
What's that?
Marriage.
Oh no.
This is, if you can't learn
Yeah,
to
you
control
gotta control yourself.
you can't perceive the information that your partner is giving you from an objective perspective.
Ooh.
It's not gonna work out.
Yes.
And
yes.
it's really like that. Like, you have to be able to control yourself and your emotions, and be able to objectively say, okay, even though I lost this, there is still a high chance that what I am doing is going to work for me in the future.
Yep.
So it's just like that's what I just thought of right now. And I'm just like,
no, that's good. That's good. Is this the last one?
one more. Oh no, that is the last one.
No,
okay, I thought there was one more. All right, well there you go, guys.
Good deal. Well, that's it. That
That's
was
the sauce
a
for
good
today.
chapter for sure. And we'll keep going on this. It's gonna be next week.
I'm excited for chapter 3.
But we'll have a playlist of this, all right, and you'll get to go back and instead of maybe reading a book, you can just watch these and kind of learn the same exact thing, maybe even in more detail. So it'll
from
be cool to get to go
different
back
perspectives. Although it's the same knowledge, but three different perspectives. Because you got Mark Douglas, you got Pay10Pips, and then you got ABK. But with that being said, y'all, thanks for hopping on. Don't forget to drop that like and subscribe if you gain some value. And we'll just catch y'all tomorrow with another episode of Chart Talk. We'll be reviewing the markets and see what they did this week, because the markets were pretty interesting, to say the least.
Definitely.
With that being said,